All right. So you're looking to buy another Tesla, huh? It's 0.99%. You can't pass up.
Yeah, that's a pretty good deal. Like I said, even the little bit of negative equity that I have, it's probably either going to be cheaper or about the same as what I'm paying now, and I'll get a brand new car. So kind of
How
a
many do you have
no-brainer.
now?
I have three, two Model Ys 2022 and the new Model 3.
Hmm.
I love that new Model 3. It's it's the best yet. Other than the size. I like the size of the Model Y, but the quietness and the comfort of the new Model 3.
Is Machine here yet? Can I start making your mama jokes? He's not here. Let me see if I can bring him. Dude, I mean, his wife is already giving him a hard time for being in space. Can you imagine if he came in on a Mother's Day? How do you think, like, what do you think is the credit score required to sign up for this 0.99% deal?
I think it's 6 something. Hold on, let me look.
It says it on the website.
Well, it just says credit rating promotion. Let's see if I have excellent. Yeah, that's weird. Under the financing options, if you select credit rating, it goes under where it says promotion and then it says 0.99. But if you select excellent 720 or plus, it goes back up to 6.49. So I don't know how they're justifying who gets this promotion.
Hmm. I don't think it's going to be that many people, to be honest with you. You know,
Well, it says promotional rate valid on Model Y orders placed between May 10th and May 31st, 2024, and is subject to credit approval. Taxes, fees, license, blah, blah, blah. Yeah, they don't really say. Just says based on credit approval.
yeah, I'm guessing they're going to ease into it slowly, slowly, and hope that interest rates come down. You know,
Yeah, I think they might be assuming it's going to come down. That's probably why they waited. So that my assumption is that's why they waited a little bit longer to offer this in hopes that it won't take long before interest rates start coming down.
yeah, yeah, exactly. Give me 1 second. All right, I'm back. Can you hear me? Okay. All right. I mean, first of all, this is only U.S. and Tesla has been doing it in other parts um, of the world already, a little bit. But this is a very aggressive, obviously subvented rate offer, right? 0.99%. I mean, that's a huge. Like they didn't start from 3.99 or 2.99. They went straight to 0.99, which is kind of interesting to me. But at the end of the day, they kind of move things from new inventory discounts to their balance sheet, I guess.
Yeah, and it's only for 3 weeks because it ends at the end of the month. So that's could be like you said, just testing the water, seeing what sticks and how many people sign up for it.
Well, we're kind of past the seasonally strong um, part of the year. That's supposed to be April and like March, April, when people are doing their tax returns, I mean, tax refunds. And that's past already. So we're at the tail end of that. So they're going to have to I think they're going to have to keep it going for June, unless, all of a sudden, miraculously, FSD, becomes like perfect and they take out even the I nag and whatever. So I think that this is going to keep going probably until June. What do you think?
We'll see. They might do it. Yeah, I would hope.
How close are you to buying one?
Well, I had them appraise my car, and it was a bit lower. I have 90,000 miles on my 2022. So I'm going to talk to them, I think, on Monday and see what that means in terms of how much I would owe or what my payment would be after. If it's about the same, then I might. I mean, it's a really no brainer to do it. If I have the same payment, it's like getting a brand new car with 0 miles. And okay, so you're just extending your loan another 2 years. I mean, it's not that big of a deal, really. I'm paying the same payment anyway, so to me, it's worth it.
Scott, how are you?
Good. How's it going, man?
Good. Chill mode, Sunday night space. Are you getting a new Tesla after the 0.99%?
I was actually thinking about picking up my second one. I was talking to my wife earlier, literally an hour ago, babe, about getting a second one. It's kind of break even. I picked up one early April with the big discount, and I got kind of the best rate that was going at the time, like right at 7%. So overall, kind of sort of spending the same money, but the payment is different. And I'm with I apologize, I wasn't looking at who was speaking. When I was looking at it, the 0.99 thing was not jiving. I mean, I did the math before I even went on this site, but yeah.
TSLA, how is the offer that you got? The trade-in offer, is it too low for you or satisfactory what you expected?
Well, I mean, it was a shock, but it kind of to be expected. I checked other Carvana, I think, and they were even lower than what Tesla was offering. So, I mean, it is what it is. I have 90,000 miles on it. So, after 2 years, so I can't, I definitely got a lot of my money's worth out of it.
No hands mode, Sunday night chill.
Man, I'm used to making sure my question is formatted with an if, why, we, and 10 words or less, bro. So I actually I had a Toyota Camry I picked up in 2021 with 0.9% financing. And I will say this about that deal. If you can pick it up, I was able to get a Camry 2021, no money down, 0.9% financing, and I made it a 4-year loan. So I was dropping whatever, it's like 600 and something, 600 and change a month. And I had that when I bought the Model Y Performance, and I was gonna keep it, and then I was looking into it. Well, turns out I had like a ton of equity in it. Like, who Carlanders, who bought it from us? Autolenders bought it for like 21.6, like sight unseen, 21.65. Yeah. Super easy experience. I offloaded it because it was just going to sit there and do nothing. So the 0.9% financing thing, like, damn, if I could just get another Tesla and have it set there, I'd do it.
Grant, welcome.
What's up?
I figured there's no one you can offend here right now, so
Yeah, that's smart.
That's funny.
you can try them. But I think both people have thick
Elon's
skins
going
here.
to jail. I'm just kidding.
He'll be there waiting for you.
Oh my god. What do you think about the 0.99% offer?
I think it's a good offer. I mean, it eats into margins. I mean, it's just another form of a price cut, but I do think it's better than a price cut, probably. Is that
Interesting.
aligned with what people are saying? I mean, they're going to eat the spread on the financing cost, right? You guys agree, right?
I mean, obviously, like what else? What's the other option?
Yeah, no. I know. It was just, I felt like that comment was met with silence. I just didn't know if you guys were saying it wasn't a price cut or something.
I think it's very similar to the 10% price cut they had in the new inventory in Q1.
It's just proof of the leverage they have to influence the market when they want, how they want. They can turn it on, they can turn it off. And you know what? You may be a bitter buyer from last month, or you may be dude, if you can pick up a NYP tomorrow or next month for 32,000 instead of 42 that I paid, go for it.
Grant, what do you think this means for Q2 margins?
I mean, we're halfway through Q2. I think there's a lot of time. I mean, my read is that they've kind of seen the folly of, I don't know. Maybe one way of saying it would be that they're realizing they're in a tough spot. So I think they're going to experiment and try to see what works the most effectively, and we'll see. But I think it'll be more apparent when this is either what they're doing at the end of Q2 or if they've tried two other different pricing and packaging strategies. Like if they keep changing it, I think that's a bad sign. If they don't, I think that's a good sign.
I think they're definitely going to have this again in June.
Oh yeah,
June,
it's just
June
May,
is
right?
season. But June is seasonally even weaker than May.
Yeah, I mean, it'll be interesting to see. Yeah, I mean, if they don't do it in June and if they just stick with list as it exists today, that would be a good sign. But if they do it again in June, bad sign. Keep messing with it, doing other stuff, bad sign. So we'll see.
Do you have a prediction for Q2 margins versus Q1?
I don't know. I mean, in my mind, the levers are they can either move metal and put margins down, or they can, and what they're doing, I think, is cutting production, which will be good for margins, but they're not going to be able to deliver as many units as they did last year, probably. So, it's more a consumption choice for them than anything I can predict. It's like they might have a really good quarter in terms of deliveries. If they do, margins are going to be bad, or they might choose to have good margins and bad deliveries. But I think either way, the situation's not a great one.
What if
If I had to guess, just to maybe actually make a prediction, I think that margins will go down because they had an inventory buildup. I don't think they're going to want to sit on all that inventory, but I would expect margins to go down. And I don't know what the deliveries numbers are going to be, but I think that if they have to choose, given they've got like a 50K inventory buildup at the end of Q1, they'll probably opt to have lower margins.
Well, that's what this cut is about, right? This is supposed to be the opting for lower margins, but the thing is, like, is this going to be enough to clear out that inventory, do you think?
I have no idea, but yeah, I mean, I would agree with that characterization. Like, this is the sort of thing they're doing because they're sitting on a lot of inventory and they want to move it, I think Elon said on the Q1 call that he didn't expect to see an inventory buildup in Q2, right?
Yeah, apparently the CFO said, Michael told us that CFO said the deliveries should be above production in Q2. And I guess this is one way you can make sure that happens.
Yeah.
Ali, what were you going to say?
Well, I was just going to talk about margins, and if you think Cybertruck could be ramping, could that help margins?
Not yet. It is ramping, but it's too soon. That's not going to help until later this year. Scott. Oh, Scarlett. Pennington.
So I think this is the ultimate test. Since 2022, we've heard Elon constantly speak about interest rates. Well, Now he's brought down the interest rates. Now they're lower than any of his competitors could offer, and the Y has just been driven down in price. So I think this is the test to see whether or not there's a huge ramp in sales between now and the end of the month. And if not, then all the other concerns that shareholders have regarding politics and turning off people, etc., then those will become more at the forefront of people's minds. But obviously, the hope from a shareholder's perspective is that what he said is correct. He bought down the rates, sales go up, and we move forward.
I don't think that's what he meant by lower rates. Like there's a difference between so if you put yourself on mute, I'll explain it. There's a difference between Tesla lowering rates for its own products versus the Fed lowering rates for the entire economy, because the latter impacts all industries, all sectors, which means people feel confident in their jobs more than otherwise. They feel secure about their economic situation, and they spend more on pretty much everything, including Tesla. That's a very different, much more positive scenario than Tesla buying down rates with subvented rates. So this is not the true test you're talking about. That's going to come later this year, maybe next year, when the Fed lowers rates. Do you agree with that? Does that make sense?
No, it makes sense. I guess my only caveat to that would be we know wages have gone up throughout the country, but obviously cost of living, cost of financing, they've also gone up. So people's purchasing power is not where people are comfortable with to spend on discretionary expenses. But obviously, people do need cars. There's always a need for cars. It's not as if the aggregate amount of cars that are being sold has gone down precipitously. Cars are still being sold. So, my hope is that at least through the end of this month, a bigger piece of the pie that would have gone to other manufacturers will now go to Tesla, given this competitive advantage of Tesla buying down the rates.
Well, so the others already have been buying down rates. This is not like Tesla isn't doing this independent of others. Everybody else is doing it too. They've been doing it for years. But and then the other thing I want to highlight is in April, the auto sales was actually lower than people expected. So I think the rest of the industry is also starting to feel these high rates. I think Tesla just felt it sooner than others. Grant, what do you think about all that?
Honestly, I'm multitasking here. I missed it.
Ali, what do you think?
I think this 0.99% interest is getting more headlines than what other companies do, because or other auto companies, because they can really hide it, because it's the dealers really that could be giving some interest rate discounts. So yeah, I see lots of cars. I mean, I'm in Detroit now visiting my mom, so there's like tons and tons of trucks and SUVs, big SUVs on dealer lots. They're just flooded with cars here. So I think it is hitting them finally. I think for a long time they were just, the dealers had almost no cars. So the last several quarters, I'm talking about the Ford, Chrysler, GM, the big three, if you want to say, they've been selling all their cars to dealers. So the dealer lots are getting fuller and fuller and fuller. And now finally, like I drive by some of these dealers here in Detroit, and they're just packed full of cars and trucks and SUVs. And so I think, yeah, this is going to be the quarter where they're finally going to show some cracks.
No hands mode.
I was going to ask if anyone's calculated the cost the Tesla's eating. You know, if someone does a 0.99%,
$10,000.
$10,000 of interest.
Yeah, but that's going to be recognized over time. I think it's not like I don't think it's at once. Actually, I'm not sure how the accounting exactly works on the financing side, but
I mean, doesn't that completely wipe their
no,
margin
sorry.
on those cars?
It's 10%, not 10,000. It's about 10% of ASP, so somewhere close to 5,000. But that's the discount they had on the new inventory page in Q1. You see what I mean? So they basically moved it from new inventory page discounts to probably their balance sheet. So
Yeah,
I
that
don't
is
think we're going to see a major change
well,
because
that's a
of it.
lot of money. I mean, that's a lot, right? I mean,
But they were already giving those discounts in Q1. That's what I'm trying to tell you.
you're saying via inventory discounts?
Yeah, new inventory discounts were massive in Q1.
Yeah, but we don't. And do you think that the vast majority of the sales were coming from inventory in Q1?
Correct.
Okay, you got it.
No hands mode. Omar, welcome.
Hey.
Steven.
Oh, I have a question. Omar, do you want to go?
I don't have anything to say right now.
Okay, you will after this. Lowering rates. I do have a question on lowering rates. So you know how the Fed, like we were at 0% and you can't go any further than that? I mean, we were basically in negative interest
Tell
rates
that
when
to
you were.
Europe.
Well, that's what I'm saying. We're in negative interest rates. But you know, Ford's at 0% now, but they took a bunch for their Lightning. They took a bunch of incentives away because they were giving all these incentives. Now that Tesla's at 0.99, could they go lower, and would it be even worth going lower? Yeah, that's kind of the question. I don't know if these lowering interest rates are really going to do anything.
I mean, the other thing they can do is like the next step they can do is bring that down payment down. Like, you know how 0% interest. But this is already, I mean, they're already doing a great deal, you know. I mean, what's the difference between 0.99 versus 0%? That's not that much. This is a massive drop in interest rates, like 5-6% drop. The question I have is, how many people really qualify for the subvented rate? Like, what's the credit score they're looking for? You know, this is only US. I think it's only for Model Y. So, you know, I guess we'll see when the numbers come out a little bit. Maybe they'll make some management commentary. But my initial take on it is that they're just moving it from discounts on new inventory to Tesla's balance sheet. They have the cash to do it. They have the debt capacity to do it. And I'm hoping it's going to be a short-term thing and the Fed rates will come down soon and this will all be behind us. Omar, what do you think?
It's, you know, it's essentially a price cut. If you think about it, I mean, it's just a different way of structuring the price cut. It seems pretty limited in scope. We're talking about May 10th to May 31st for Model Y customers in the US. This doesn't apply to all markets, right? Of course, the US is only a third of their market. It's only one model. I think they're experimenting with it a little bit to see what the elasticity of demand looks like versus a price cut. Because, you know, okay, 42,000 versus 44,000 kind of sounds the same. But I mean, this can be a pretty stark difference in monthly payment if you are financing it. So, I mean, I think they just need to move Model Y inventory. That's why they're doing it for this and not the Model 3 or the other models. And hopefully it'll get some people to order by this month and they can deliver those cars before the end of the quarter, which is, I think, what they're after here. So, I mean, it's a great deal. Sounds like a lot of people are taking advantage of it. So, um, yeah, I think they're kind of just continuing to experiment with demand levers here.
Definitely. Yeah, so this is the Sunday night chill mode kind of space. So no hands mode. It's very unlikely that someone's going to get yelled at unless if they're called, if their name is Grant. For Grant, it's very highly likely. But otherwise, you know, feel free to come up and chill out. Feasible triple, go ahead.
Yeah, so regarding the credit score, they have an option just called promotion. So that's when you get that 0.99 interest rate. But if you select like even excellent credit score, it still gives you the 599. So it seems to be like they're ignoring the actual credit score, but I'm not sure if that's in actuality or just in the configurator.
So in the configurator, you can actually toggle between different credit scores or the promotional rate. So if I have excellent credit, 720 plus, they're suggesting a financing rate around 6.49%. So at 6.49%, it's 710 a month, okay, for the base Model Y. At the promotional rate, that goes down to 603. So essentially, I'm saving $107 times 72 months. That's 7704 over the term of the loan.
I don't know if that's, I mean, are you factoring the amort schedule there?
The amortization schedule?
Yeah, I only heard the tail end there, but I mean, the interest that you're paying on a car loan varies month to month over the term of the loan.
This is all calculated by Tesla, so I'm just going based off what's on their website. When you have the promotional rate, it's 603 a month. With the excellent credit, it is 710 a month. And if you have, let's say you have bad credit, right? So I'm going to say fair credit less than 640. Tesla suggests that your financing rate might be 11.64%. Now, I'm not sure, like Yaman said, what credit scores qualify, but if you have a low credit score, it's 11.64% interest, which means your payment for a base Model Y comes out to $820 a month. So you'd literally be saving, $214 times 72. That's $15,000. Now I don't know if those people qualify or not, but if they do, that is the deal of the century for them.
Grant, the payment is fixed monthly. Yes, it's true that you're paying less in interest every month because your principal increases, but the payment is fixed for the term of the loan, so it doesn't matter.
Yeah, I'm actually just curious though. I just went onto the website. Where are you seeing the math?
So go to the Model Y page, tesla.com/Model Y/design. If you click order now, and then right underneath the specs, there's a thing that says customize. So that'll pop up a window and you can sort of change some of the assumptions on the financing.
There is an asterisk on the promotion APR. So if you scroll down, it says subject to credit approval, but they don't tell you what the credit rate needs to be.
No hands mode, Pennington. Pennington.
So I did see my first Cybertruck today, and it looked much better in person than it does on the picture. But sort of my question would be, wouldn't it be fun if we could compare? You could lease a Model Y now for $600 a month. And even if you don't need it, it just sits idle. And if Robotaxi's FSD is approved, let's say a year, 2 years from now, what that car could generate per month, and just compare that to what your cost of ownership would be. Has anybody sort of gone through that thought experiment given this reduction to 0.99%?
I mean, back in early 2016, he said that any income you generate would be a partial offset to your monthly payment. So it's not going to be like you're not going to make millions of dollars renting out your Tesla, you know. Especially now that it's 8 years later, and there are millions of cars out. And how many robotaxis do you need in the US? The adoption is going to take some time, even after robotaxis come, even if the software is that good and the platform is ready, legal approvals are there. it's still going to take some time for the masses to adopt and get rid of their cars, to start solely relying on the robotaxis, etc. So I wouldn't expect for Tesla owners to become uber rich from Ubering their Teslas.
Yaman, I have a question for you. So I know you were a skeptic that they would do these rate buy downs. And I'm just curious, how do you think they're doing it? Because I can imagine kind of three ways you could do this, right? You could uh, go with a third party partner who has this on their balance sheet, and you pay them an upfront fee for the rate buy down, or you're paying them on a monthly cadence to buy down the rate, or the third option is that Tesla put it on their own balance sheet. So, what do you think? How do you think they're thinking about this, and what would their approach be?
Well, the third option is what everybody else did. So I'm guessing they're going to do that. They don't have any debt on the balance sheet, and they can't kind of dip their toes in this business little by little with just a couple weeks in May first, see how that works out. And it's only from Model Y. Maybe they're trying to work off some inventory, but my guess is that they're going to keep it on their balance sheet, but I guess we'll see. Now, having said that, like, even if you keep it on your balance sheet, after 6 months, a year, 2 years, whatever, you can securitize those things, right? And that's what those, the other automakers also do. They kind of keep rolling that debt, but it is a risk on your balance sheet. Like, it's still a risk you're taking on, balance sheet risk. All else equal, you would rather have people buy your cars without you having to resort to this. And I think this is just Tesla's kind of last resort attempt at working off this Model Y inventory before the new Model Y comes later this year.
That makes a lot of sense. And I mean, when you look at the monthly payment, it's like 15, 16, 17% lower. I mean, they're never really gonna cut by a price by that much. So this rate buy down could move a lot of cars.
Yeah, I'm curious how it's going to play out, because people are like, I mean, the same thing that who said that? Pennington said this earlier, before I think a lot of people joined. He said that this is it. We're going to now find out, if Elon was right when he said if the rates were low, our sales would be better. Okay. But what Elon meant is if the Federal Reserve cut rates, which impacts everything across the world, not just Tesla sales. So if the Fed rates were 5% lower, instead of being 5.25%, 5.5% now, if they were 3%, that means people feel more secure at their jobs because companies aren't laying off as many people. That means stock market is at all-time high, so people are seeing these high 401k balances. It means that they have more equity in their housing, in primary residences. So all of those things impact. Like, it means their interest on credit cards are much lower. So all of those things impact people's consumption decisions. So that's a lot bigger deal, like in the orders of magnitude more important than doing a subvented rate buy down on your one model for a couple of weeks. I mean, they're not in the same league. So you can't just look at what Tesla did, look at the result of it in the next few weeks, and decide whether Elon was right or wrong. We're going to find out Elon was right or wrong, what he says on interest rates, in the next few years. So that's a long-term kind of process.
The only thing is, right now, if we were to see interest rates drop down, let's say from 8%, 4%, or 3%, something in that magnitude, one would have to assume that the unemployment rate would be up considerably, that people's uncomfort would be up considerably, and consumer confidence would go down. So it's sort of like, well, right now, it's not a great situation, but one could argue that today's situation is better than a world where, yes, interest rates are lower, but in order to have the interest rates lower, the economy would have had to, I'm not going to say tank, but at least show meaningful deterioration.
Can I take that?
Sure. No hands mode. Go ahead.
Let's go. The only I would object to that.
Yeah. So
I would
I'm
object to that.
this
You there?
low
Hold on.
interest
Hold on
rate.
one second. Hold on one second. Tesla will triple. Can you hear JB Capital?
I guess not.
Oh,
Okay, I'm gonna
can you hear
move
me
you
now?
down and bring you back up. Yeah, JB triple, I can hear you. I think it's his connection. Go ahead, JB.
Okay. I was just going to object to that thing that he just said. Not necessarily. The Fed is not trying to kill the economy. They're just trying to fight inflation. So they're really close. We're really close to seeing a rate cut. We're not going to see devastating unemployment before they cut rates, especially in an election year. But I think following Tom Lee on this and Fudge Strat and reminding everybody that they're not here to attack the economy. It seems like they are, but they're not. So it's not going to get that dire before rates start to cut.
Yeah. Well, I would, JB, I actually, I would just mark that as a forecast, right? Because we don't know really what's going to happen with the unemployment rate. And the fact is, initial weekly claims. So in the macro analyst account, I also hold spaces every now and then. And I analyze macro data very closely because I really screwed it up in 2022 with macroeconomic forecast. I mean, I didn't have a macroeconomic forecast because I thought nobody can predict it. And therefore, just focus on micros, which was obviously kind of slapped me in the face by doing that. So now I'm taking a really close look at macroeconomics through that account. And last week, we had a really important data point that came out. University of Michigan consumer sentiment plunged last month, while inflation expectations went up, both 1 year, 3 year, and also longer term inflation expectations are a little on the high side. So that means the Fed is nowhere near being able to cut interest rates. Until those inflation expectations come down, I would not expect a rate cut. Even if consumer sentiment plunges, even if consumption declines, which means a recession is possible and higher unemployment rates are possible before a rate cut. So just put an asterisk on what you said.
I can agree to that for sure.
Okay. Ted double triple, go ahead.
Yeah, so this is anecdotal, but I am very tempted to look at that 0.99% interest rate and replace my 22 Model Y, because I think I have like a 3% interest rate, so this would be more attractive. But then I have to also look at the depreciation that I lost, and obviously new Model Y refresh is around the corner, so I'm also considering that. But I think some people might look at that seriously and consider it, especially if they're a first time Tesla buyer. So that would be nice.
Yeah. I just want to kind of build on what I just said a second ago, which is, this data point last week that came out about consumer sentiment declining at a very rapid pace last month, while inflation expectations rising, putting the Fed in a difficult position. Okay. That Elon's recent decisions should be considered in that context. Okay. Because I think that he's getting ready for a recession. And I think that if he wasn't making these aggressive decisions, Tesla's future would be in jeopardy. But thank God he is taking these actions. Okay. Because the fact is, in the last 12 months, Tesla generated only $1 billion in free cash flow. That's very little. And it's kind of like razor thin. Q1, negative free cash flow. Okay, now Q1 is seasonally negative, but Troy says Q2 will also be year-over-year lower deliveries, and then the second half is uncertain. The second half of this year is uncertain. Cybertruck will hopefully ramp to volume production, so I think free cash flow should be okay if Cybertruck continues to ramp. But if the Fed keeps these rates higher for longer through the rest of the year, I think we might have a recession start later this year, like by the end of this year. So he's getting ready for those times, just in case. As Omar points out frequently, Elon is, he went through the 2008 crisis. He says only the paranoid survives. He said that multiple times, and I think he's just in this like paranoid mode right now. And all of his decisions should be considered in that context. Tesla will triple, and then Michael.
So, do you think that Fed will actually allow the recession to happen, or they will, just start drastically reducing the interest rates and start quantitative easing just to prevent the recession? Since the whole goal has been to accomplish this, soft landing, right? In 2008, we were kind of told that there was going to be a recession. There was no other way out of it, right? And like everybody just braced for it. We went through that period. But this time they're doing everything to avoid it, right? And so do you think that Fed will actually buckle and try to do something to prevent actual recession?
So, very good question. And it's clear that they would rather not have a recession. Like they would rather not have high unemployment rates. Okay. But the fact is, these inflation expectations have a way of feeding on itself. And they went up last month, which is very unusual. Now, somebody mentioned Tom Lee earlier. I think Tom Lee has an optimism bias and a confirmation bias. Okay. And everybody has biases, but I think it's, I'm kind of starting to see cracks in his arguments a little bit. And if the inflation expectations remain high, meaning like if people expect 4% inflation a year from now, 3 years from now, and they go back to their employers and ask for 4% wage increases, then we can turn into like an inflation spiral. And if that's kind of starting to happen, there is no way they're going to be able to cut rates. The Fed will be able to cut rates. So I don't know what unemployment rate it will take to bring those inflation expectations down. So let's say, for example, unemployment rate is at 4%, and people are still going back to their employers and asking for 4 or 5% wage increases, then you can't cut rates. If the unemployment rate jumps to 5%, and people are still going back and asking for higher because they're going to, let's say, gas stations and seeing high gas prices, they're going to the market and seeing high food prices, then you still can't cut rates. I don't know, and I don't think the Fed knows what unemployment rate it will take for people to calm down and maybe not worry about wage increases and instead start worrying about keeping their jobs. So that's TBD. Okay. I don't have a way of predicting that. But Elon is in the shoes of like, oh shit, we had $1 billion of positive cash flow in the last 12 months. We had negative cash flow in Q1. We're having to buy down rates by 5% in Q2. The Fed is signaling higher for longer. The unemployment rate started ticking up, and it's about to trigger the SOM rule in the next couple of months. And we have the election uncertainty and rising geopolitical tensions. So, like I say, people are worried about, well, what about the feelings of the people getting laid off? And, you know, like I get all that. I'd rather people not lose their jobs. It's very stressful for them, for their dependents, for their families. I get all that. But at the same time, there is no yoga on the battlefield. This is a war. Okay. We'll worry about therapy after the war is over. Michael.
Yeah, so I just wanted to pose a question that maybe we could think through. Um, is it worse for automotive sales to be in a high interest rate environment like we are now at 5.25%? Or is it worse for automotive sales to be in a mild recession? And like you can consider, a mild recession. It's unemployment is going to affect a small percentage of people, and then the rest of people are a little bit more on edge about spending uh, by small percentage as well. Versus high interest rates, everyone has to pay the high interest rates. So I wonder, is it actually a worse environment for automotive sales? Yeah.
I mean, that's hard to answer, but the thing is, like, in a recession, it's not just the people who are losing their jobs. Like, everybody starts worrying about their jobs. Everybody's seeing lower sales, and nobody really knows in a recession how bad the recession is going to get. So everybody pulls back on spending, you know. So I think they're both bad. I don't know if I would rank it. JB, Tesla will triple, and then Tesla. Then no hands mode, guys. No hands mode.
Cool. I was going to ask a question. I've been on the spaces for a while and wait for you guys to talk about this one subject. I'm sure you have. The question is anybody worried about June 13th and the vote and thinking that it's best to own Tesla stock after the vote? Is anyone thinking that, or thinking it's going to be more of an upside after the vote? There'll be more people jumping in the stock? Yeah.
We'll get back to that topic because that's a topic
Fair.
change. So Tesla
That's
will
fair.
triple, and then
That's fair.
Tesla.
Yeah, so the point you were just making, Aman, back in 2008, remember GM killed 4 brands. They killed Pontiac, Saturn, Oldsmobile, and I think Saab, right? So there was going to be a lot of companies and a lot of hurt, a lot of pain, like Rivians and Lucids and others that are pretty much dead, much less, for the sub brands of the GMs and Fords and whatever and Toyotas that may also get a big hit during this recession. And if it happens, right? Like I remember in 2008, the car sales like pretty much went to nothing, right? And it was a pretty long recovery after that when car sales kind of recovered. So we're really bracing in for this.
Exactly. Tesla.
Do you think the increase in megapack sales and, as they increase production of that, as well as FSD getting incrementally better and more people, I know there's not a lot of conversion so far from the 3 free month or 30 days free, but as it gets better, you can expect that with that being a high margin product too. Can that maybe offset some of the negative margin or negative impact that the auto sales could do?
Yes. I mean, short answer, yes. Long answer, FSD, I think is going to take some time to get to a material positive cash flow situation. Like you definitely need, just kind of do the back of the envelope calculation. If you have 1 million people paying $100 a month, that's only $100 million per month. And per year, that gets to $1 billion. And we're nowhere near 1 million people paying $100 a month. Okay. So that's going to be some time. And it has to be in the billions range to be a material. But I think mega packs, definitely. I think mega packs have that kind of potential to carry I mean, it's better to have these mega pack sales than not. Just imagine if you're GM, Ford, and other legacy automakers that don't have these mega pack sales. Like they're going to be fucked, And Tesla has this mega pack sales, and they have years of backlog. We've seen the contract numbers in the 10Q. In another space, people talked about how there's years of backlog with interconnect and bunch of paperwork and bottlenecks all throughout the supply chain. But that means Tesla has these mega packs sold basically. They just have to produce them efficiently, and I think the lower lithium prices help. in the near term. So you're right. Megapack sales will definitely buffer Tesla's downside versus automakers that don't have these megapack sales. That's a great point.
Hey, Aman. So I would like to connect that to the government infrastructure spending. Isn't that sort of dependent on that? For example, we have government spending money on things like CHIPS Act and other things to like boost up the infrastructure. Obviously, that leads to additional inflation, right? Wouldn't Tesla also be affected by that if they actually cut that additional spending? Because it seems like the government is actually kind of working against itself, right? They're putting money into the economy by spending on infrastructure, and yet the Fed, has to deal with that and adjust the rates accordingly. What do you think about that?
So what's the question exactly?
How do you think the infrastructure spending impacts the inflation?
Well, the Federal Reserve takes government fiscal policy as given, and then they adjust accordingly. But the deficit spending right now is very high, and projected to be pretty high this year as well as a percentage of GDP. So so that's part of the reason why the Fed is keeping these rates higher for longer. Does that? I don't know if that answers your question, but
Yeah, I think so. I'm also wondering if that has any impact on Tesla, right? Like if, especially on the batteries, on the Megapack side, if the government was to cut the spending on infrastructure, would that have an impact on Megapack purchases?
I mean, like Megapack side is production limited and interconnect limited, so I don't think it would have much of an impact if IRA went away. And honestly, like it would actually help Tesla's positioning on the automotive side, I think, because these hybrid cars are getting the same credit with tiny batteries. And you're seeing these Toyota hybrid sales, rising as Tesla's growth rate slows down. So hybrids are benefited more than EVs, which is kind of asinine. But Omar, can go on a 20-minute rant about all that. So before he does that, let's kind of switch topics to what JB asked about Elon's compensation package. So let's ask Omar what he thinks about this compensation package. JB kind of proposed that maybe it's better to wait until to buy the stock until after the vote. Omar, what do you think?
I mean, a lot could happen at that meeting. I don't know. It's hard to really say that it's going to have any effect one way or another. It's probably a coin toss as to whether it's a positive or negative effect, given the totality of the news that day. So I'm not stressing too much about it. I'm not hedging my position or anything. Even if the vote goes no, it's really a non-binding vote, so they can still give him the compensation plan anyway. But it doesn't really look good if shareholders voted against it.
Yeah. And it's also uncertain whether Elon would leave or not, even if the vote came no. Like kind of, I personally think that he would stay, but that's obviously uncertain. So no hands on Pennington.
Yeah, I don't think he's going anywhere. There's just too much exciting stuff happening at the company to leave.
Exactly. Like if you had a baby and someone took your money away, are you gonna leave your baby? No. You're gonna stick with your baby. And happy Mother's Day to all the mothers in the audience. Pennington?
Yeah, regarding the comp vote, even if it's approved, even if it's compensation, the $55 billion is given to Elon, sort of to Adam Jonas's point, it's not determinative in the sense that it doesn't answer the 25% issue. So I feel like the only thing that's really going to get us past this hump was if the board, I guess after June 13th, came up with another compensation package that could get them up to the 25%. Until then, at least from the market's perspective, the wishes that he's posted, that he's discussed during the earnings calls, that can't be satisfied June 13th.
Yeah. Is anyone in the speaker board hedging their bets heading into this compensation vote? Yeah.
Yeah, I did. I mean, I sold actually.
Oh, okay.
Yeah, unfortunately, I got worried.
Hey, man. I mean, you do you. It's your personal finance. Nobody's gonna. So when did you sell?
Geez, it was the Monday night on the first dip. Over the weekend, I just got worried, and I was like, "Why am I in this stock right now when all can go haywire?" And I was just thinking of the tweets after June 13th, if they got sour, because we all can admit that Elon's tweets are less than great sometimes. And I was just thinking about that, and I was like, "Why am I in this right now? I'm a long-term believer, but do I need to be in it right now?" And Monday night, I said, "No, I don't need to be in it."
Yeah. Yeah, I got you. Yeah.
Well, a
What
reason.
price did you sell at?
I can pull it up real quick. I have to look at it so I can give the exact number.
Well, yeah. You said this Monday, right?
Yeah, it was either Sunday. Yeah, Sunday night, Monday morning,
Yeah.
the very first dip. I was like,
Yeah.
"Yeah, I'm
Wow.
out."
So you're looking at like $185 per share. I mean, so far, I guess you made out.
I think it's 182 is what I got.
Yeah.
And
Yeah.
I did buy. I'm not trying to brag. I got lucky. April 22nd, that was the low. Is when I really went all in. So I was like, you know what, I've done all right. So because
Wow.
that was the low, 144. So
Well, I
I
guess
was
your trading record is better than machines.
very lucky. Not bragging. Very lucky that one time.
Mm-hmm. Yeah.
One thing you could miss though is if version 12.4 of FSD is indeed a huge improvement, and if that has any, if that generates any kind of momentum and FOMO, but historically that's also kind of unlikely, but just something to think about.
Yeah, I was
Yeah.
weighing that against Elon leaving, and I'm certainly wrong for that. But I was just, or the tweet storm. I was just weighing all that against it.
I mean, what do you think is the probability of Elon leaving?
What I think the probability of him leaving is,
Yeah.
I mean, low, but the tweet storms pisses off finance, right? Just pisses off Wall Street.
That's so funny. I don't think Wall Street cares about these tweet storms. I wouldn't worry about. I wouldn't worry about the tweets too much. I mean, you've already heard of the board saying a number of institutional investors, express their support for Elon's compensation, and I mean, they don't care. Like they don't. These big institutional investors don't really look at like it's different if you are kind of like a registered investment advisor that's doing more personal finance, like Ross Gerber. That's a different story. When you have to explain, kind of answer questions from your clients one by one, and at a difficult time, they all call at the same time when the stock goes down like 5-10%, whatever, and you're like looking for reasons to explain it. But that's very different from institutional investors who manage tens of billions of dollars that really drive these stock prices more than anything else, and they're more focused on the fundamentals of the business or whatever investment methodology they have, um, like the profits and the revenues and leadership in FSD, AI, that sort of thing, and they kind of get down to the nitty gritty of the discounted cash flow models. They couldn't care less about these tweets, in my opinion. But I actually used to work in the industry, so I think I have a pretty good gauge on these things. Brandon and then Pennington.
Yeah, so I don't think I read this anywhere on X or anything. I'd like to take credit for it myself. I'm think there's a good chance that they're gonna raise rates for the Model Y to like 1.99 in June instead of all the way back up. Unless they've said otherwise, I haven't seen that. And I think what they're trying to do is to create a sense of urgency because I think Tesla has fallen into this trap of people going, I'll just wait for the prices to go down. I'll just wait for the prices to go down. I'll just wait for this new car to come out. And then it's kind of just, rolls down the hill forever. So I think they're going to try to create a sense of urgency by gradually raising the rates themselves.
No hands, Mount Pennington.
I just wanted to say, Brandon, that makes a lot of sense if they can drop the rate a lot to start and to try to clear out some of the inventory that they've built up, and then slowly raise the rates until people no longer have that mentality of, oh, I'll just wait for the next price cut, and instead have a mentality of, oh, I better buy before the rates go up again.
Brandon, what are you basing that on?
Absolutely nothing except for
Yeah.
in sales that urgency is very important to create a sense of urgency when you're selling something. And Tesla has lost their sense of urgency. They don't have that right now. No one's like, I urgently need to buy this. There's no reason to. There's every reason to wait, not every reason to get it right now. So you need
But
to build a
don't you
sense of urgency.
risk diluting the power of the sales incentive if you only raise it 1% after the period? Next time they won't take you seriously.
Yeah, it could just be a one-off thing. They might be trying to get really good numbers for this quarter, or better numbers than they had last quarter since it was pretty bad. So that's just my opinion. I don't know if it's true or not. I have a feeling.
Well,
guess
as
we'll
soon
find
as
Well, you sound very strong on it. So, would you like to make a coffee bet?
Sure, I'll make my first coffee bet.
Oh, this is your first one. All right,
Yeah,
let's pop your cherry. So we're gonna say I think these subvented rates are gonna be here in June as well, and you think it's gonna be higher.
I
Right.
think they're gonna raise it. I'm just gonna say they're gonna raise it higher than 1% than what it is right now by
Okay.
after May 31st. Yeah.
Okay. Great. I'll put that in while Pennington talks.
I remember listening to the last Berkshire meeting, and they were up there, and somebody said everybody's replaceable. So I guess my question to Omar would be: let's just say Elon decides he's going to leave, the vote goes against him, and we don't think he will, but he does. And you also said last week that FSD and Optimus are owned by Tesla, not by Elon. So my question is, Omar, what do you think you would do with your shares in that situation?
Well, he's not going to leave. I don't think so. It's kind of people letting their imagination run wild. We see these imaginary stories really, dominating the Tesla conversation, really. Oh, the affordable model's canceled. The supercharger network shut down. Elon's about to leave next month. And in reality, none of these things actually happen. So what you're going to see is a massive number of people who are thinking the same way. They're selling the stock. They're afraid to hold it because they're all thinking, what happens if Elon leaves? So now one of two things are going to happen at that meeting. One, they announce the vote and it's not in Elon's favor. And he immediately gets on stage and starts crying and says, I'm leaving. He throws the microphone on the ground. He sprints for the door and he's never seen from again, which I consider to be unlikely because even if they vote no, they can compensate him in other ways. They could maybe give him a smaller package or figure something else out. It's not the end of the world, right? It makes it more complicated to get him to 25%, but it's a relatively minor setback, all things considered. Or then the more likely scenario, the vote is actually affirmed, right? So do you think IR would even put this on the ballot if they didn't think they had a chance of passing it? Do you think they asked maybe their major shareholders what they thought to get a good sense of what the vote tally might look like? So most likely it passes, right? Everybody stands up, everybody claps. Now everybody who panic sold their shares suddenly is listening to Elon, and he's talking about how they're going to have a Robotaxi and it's so great. Now everybody's panic buying at the same time. And, now you're buying the shares at a higher price than you sold them at. So I think, I would probably put the chance of Elon leaving at, 2% maybe. So if he were to leave, I would examine the situation based on the details of what's going on and consider what to do with my position. But it's like Elon said, I mean, they're kind of, even if he was gone, FSD's kind of reached escape velocity, and they still have Optimus, they still have other assets. I don't think it really changes all that much, honestly, but obviously it'd be much better to have him as CEO since he's the one who led the company in this direction. And I mean, the EV market is just so crowded these days. You have to take the company in a different direction. You have to differentiate yourself somehow. You can't just be just another EV. You have to be something more. And I think his vision for the company is obviously the way forward. They have, just an incredible product here. So yeah, I expect it to probably not end up in him leaving.
Yeah, but what we think of is the likelihood of him leaving um, is not really relevant to the stock. What's relevant is what the street starts to think. And if the vote fails on the 13th, I could easily see a 10-20% down day as Wall Street prices in um, uh, the chance of him leaving. And for the people who know that it's a low percentage chance, that could be a buying opportunity.
I don't know. I don't worry too much about Wall Street thinks. Wall Street is like a room full of morons. Imagine if you asked a room full of morons what they thought every day about everything. Would it be particularly useful? This is really a situation where they have a nascent business that I think is about to grow very rapidly. And it'll take a little bit of time for the street to pick it up, but they will probably, within the next 12 months. You're already starting to see a lot of people talk about it. So most of these fears people have, superchargers being shut down, Elon's going to leave the company, this or that. He's, just going crazy, destroying the company. Most of it is just a lot of unfounded fear. Pennington.
I remember the end of 2022, Elon came on a space, and this was, I believe, immediately preceded by mass layoffs. And he's basically said, we're preparing for recession, and market's not great, and we'll be willing to take margins down really low, et cetera, et cetera. So now we're having a similar conversation in 2024. And I guess there's a little bit of a conversation right now, sort of just related to this space, which is, are Elon's decisions now about the recession, or is he making these decisions now about everything solely in terms of this is what's needed to do to differentiate Tesla going forward? So that we were speculating before that these decisions are because of recession fears, but can that really be the case if he made these decisions a year and a half ago? But today, could they just be about something completely different, which is we changing our business because FSD is advanced, we have to differentiate, and this is our path forward?
Yeah. Well, I mean, it's kind of speculative, right? Like either
Yeah.
way, it's going to be a speculative answer. But I guess you can imagine like when the margins were high and we were rolling in dough, and how the company kind of started overhiring maybe, and now the times were a little tough. I mean, it is a fact that Tesla generated only $1 billion in cash flow, free cash flow, in the last 12 months, and negative free cash flow in Q1. And it is a fact that the interest rates are staying higher for longer than markets believed just a few months ago, and even the Fed believed just a few months ago. And it is also a fact that the unemployment rate is ticking higher. starting to tick higher a little bit. And even the initial weekly claims came in a little higher. And one theory I have that macro analyst whispered in my ear the other day when I was talking to myself is employers have been holding on to employees because they found that they found those employees really hard to hire in recent years. They had to overpay. They had to make a lot of investments into HR to get these employees finally. And therefore, even as the economy starts kind of showing these cracks, I think most companies have been reluctant to lay people off. But if it becomes clear that the economic downturn is in the cards for maybe later 2024, 2025, then that can lead to an acceleration in layoffs. So there's also that possibility. So things can turn south real quick for the economy, and Elon is going to sit there and cross his fingers and hope that they don't.
I think he is leading by example a little bit for the industry. If you just think on a macro scale about what actions would accelerate a Fed rate cut, inflation was high, new car prices were a big component of that. He was the first to start cutting prices, which brings down inflation. Now, really, we need the labor market to soften. And he's done some cuts. People look at what he does, right? When you look at X, for example, there were other layoffs that followed that at other tech companies, Google, for example. So I think people do look, and there'll be reverberations throughout the industry where other tech companies will look and say, okay, maybe we need to do some layoffs too. And in aggregate, that ends up coming in the jobs report numbers, which affect sort of people's expectations for where monetary policy is headed. So if every company acted like Tesla, then inflation would probably be pretty tame.
Yeah. But every company would have to have an Elon, and obviously there's only one Elon. Yeah, people are really underestimating the urgency of the situation. That's why I think they're kind of looking at Elon's moves and saying these are rash decisions. I don't think that's the case. I think he's, in a very calculated way, making decisions that are necessary. And maybe there is some truth to the story that the supercharging head Rebecca maybe push back a little bit on not cutting as many people as Elon wanted, and maybe that did lead to an opportunity for Elon to kind of use it as a, if you don't do what I say, then your entire department is gone, kind of thing. Maybe there's some truth to that, but it is if you're gonna have to do that in a year or two anyway, because everybody else is now on NACS, North American Charging Standard, and the rest of the industry can kind of pick up the slack in building out this charging network for the US, then maybe this a possible economic downturn, is the time to kind of pull that plug and make an example out of things. Jimmy.
Yeah, I want to talk a little bit about R&D costs. Tesla is one of the very few innovative companies in this country because it pushes a large percentage of its revenue into R&D, and that R&D is meaningful. It's actually going to robotics, into AI, and so forth. And in contrast, Apple is spending 3 times its R&D budget on a buyback that no one asked for, a buyback that wasn't needed. And it's not the only company to be doing buybacks. Buybacks, you would think, would be a low interest rate environment thing where, okay, maybe the market is in a downturn and they believe that their stock is undervalued. No. So they're using these buybacks as an excuse to tell the market, we may not be innovating. The stock price will be going up anyway. We've stopped trying to figure out ways to innovate. We don't know what to do anymore with our cash. Cash hoards are becoming extremely common around the world right now. For example, EA Games has a $10 billion cash hoard. Disney has a $12 billion cash hoard. Nintendo has a $8 billion cash hoard. It's getting really ridiculous. And you would think if rates were so high, they wouldn't even attempt to do buybacks. But it's not true. Rates are somewhat high, sure, but the real rates, interest rates minus inflation, are negative, or basically around zero, depending on how you want to define CPI numbers right now. So these companies think,
false. Real rates are high.
okay, have you looked at the inflation rate?
Yeah, 5.25. Inflation rate is coming down, declining. Inflation expectations ticked up a little bit last week, but real
what was the
rates are
inflation
still.
rate, Yaman? What was the inflation rate?
It's about 3.
What was the CPI number? Okay, so now take the interest rate minus the inflation rate. What do you have?
Yeah, 2%.
The real rate is actually below historical averages.
You said negative.
Okay.
Now you're changing your tune.
No, I think it depends on how you want to define it. It's negative if you look at Japan. It's negative if you look at Germany. It's negative if you look at many of the other countries. I really don't take an American-centric view on this. There are so many countries out there that have innovative companies as well. I look at it from perspective of the world. So anyway, look, at the end of the day, why is it that these companies feel that they can do these buybacks and not push investment into R&D when Tesla is the only one? Tesla has to cut, has to become more efficient, because R&D doesn't work unless you're an efficient company. R&D loses its impact the more bloated and bureaucratic your company is. And that's the reason why Elon was talking about we have maybe too many middle managers, becoming a little bit too bloated, maybe a little bit inefficient. I'm going to stamp that out right now. At Google, for example, when they do push R&D through, there's a lot of middle managers. It takes a long time to go from planning, conception into implementation. Years, if not sometimes nowadays for some projects like self-driving, decades. There are so many forms of this that appear extremely ridiculous.
Thank you.
Okay.
Yeah, you can stay. Just kind of break up your points so we can have a more kind of teamwork kind of discussion. Pennington, go ahead.
Yeah, I just wanted to respond to that. Apple, Tesla, very different. Tesla's not throwing off the free cash flow that Apple is and has been for so many years. Apple committed years ago to their bigger investors that they will be buying back shares. They've been doing it for a long time. Their outstanding shares has been brought down significantly over the years. So look, in the future, Tesla could be worth much more. But right now, it's just, at least in my opinion, it's not really an analogous comparison.
I think that's unfair. The comparison I was pointing to is Apple has run out of things to invest their cash flow into. There are 3 reasons to have cash flow. Dividends, you give it back to shareholders. Number 2, you push that money, the cash flow, into reinvestment in the company. Number 3, you use it for alternative purposes. Perhaps, for example, you could basically put it into a bank account and have it generate returns. That's a legitimate way of doing it, but with rates like this, it's not really worth their time. So any claim that Tim Cook has told his investors, we're going to be doing buybacks, and where buybacks are our #1 priority, not innovation, I find to be a very ridiculous argument.
Okay. Thank you, Jimmy. Steve Netness, short question, please. Steve, you have to unmute yourself for us to hear you.
All right. Hey, guys. I'm jumping in on a totally different but kind of related. I just want to know, in this crowd, GameStop, the roaring kitty, he was the person that...
Jimmy, go ahead.
You want me to respond to him, or can I just, go into a different direction?
Do your thing. Do your thing. But the thing is, like, I think your strength, expertise is really geopolitics. If you have anything to kind of talk about that, I would really appreciate that. Yeah.
Sure. So the tariffs coming into play against Chinese EVs will not be the very first tariffs. Look, at the end of the day, a lot of countries are looking to produce these EVs locally. They want to enter distributor relationships with China if they can. They will be willing to introduce these tariffs. Turkey has talked about introducing tariffs against Chinese EVs recently, and apparently there is talk that they're going to introduce these tariffs by the end of the year. There's a lot of reasons for this. Flooding the market like Turkey with cheap EVs from China doesn't help the Turkish economy, which does, by the way, assemble cars. And they're not the only country. Many European countries are in the same position. It's true that you should get a certain number of Chinese companies investing in your economy, building manufacturing, and so forth. You should also have local companies that want to partner with them. And so those local companies are building infrastructure and are trying to talk to these Chinese companies to do this. Obviously, Tesla's not in the same position, but I very much doubt there'll be tariffs against American EV car companies. So what I would say is this, I'd love some response from it. Once these tariffs come into play from America, Canada, from Turkey, from other countries, it will basically harmonize tariffs in many Eastern Asian countries. Thailand, Singapore, Malaysia, all have
Correct.
tariffs against Chinese EVs.
Yeah.
What do you guys think about that?
Yeah, Omar, did you hear this news that US is thinking about putting 100% tariffs on Chinese EVs?
Yeah, pretty
Yeah,
crazy.
but
Biden should
BYD
be making an announcement this week.
but BYD already said they're not targeting, like trying to sell to US, right? I guess this is for other Chinese companies, the dozens of others.
BYD's been investing in selling into South America and Mexico. NIO, I think, has announced they want to come to the United States. There's certainly about 90 different EV brands trying to sell into an extremely saturated market in China. There, probably would be some that would love to export to the US if they could. And there was an existing 27% tariff. That's obviously pretty hefty. It would eliminate probably most of the pricing advantage these Chinese cars have. But some people were worried that they could even just swallow that and use it to gain a foothold in the market and just wipe out American companies. So now they're considering raising it to 100%. So I have mixed feelings about it. I would actually probably prefer they just keep it at 27%. There is also the risk of a retaliatory tariff, although China already has a 40% tariff on US autos, and Tesla obviously makes their cars within China, so they'd be insulated from any tariffs on the 3 and Y. But yeah, it's an interesting situation. I'm interested to see what Biden has to say this week.
I think these tariffs, legally speaking, are responding to Chinese national subsidies for their EV export market.
Yeah, Jimmy, I'm looking for a more collaborative speaker board, and we can't have you talking after every single person. So maybe let's go like one every 5. How about that? Grant.
Yeah, my understanding is that the 100% tariff is really, I mean, I'm sure it helps, but I think it's definitely at least partially Biden making a political calculation. I mean, Trump's going to come in and be talking about the need to take hard action against China. He's kind of just preempting that by giving himself ammo in any of those debates or conversations around who's tougher on China, et cetera. I mean, I've seen a couple people say that's the real reason for this. A second thing, because I'm not a trade expert, isn't BYD building a factory in Mexico that would give them access to NAFTA and kind of like, circumvent the tariffs in any case?
Is that right, Omar?
There's been a lot of speculation that Chinese companies, which are investing heavily in Mexico, for example, at Elon's Tesla factory in Mexico that they've proposed, they're asking suppliers from China to come to Mexico and set up shop there, essentially building a Giga Shanghai in the United States with those same Chinese suppliers, working with the low cost of the Chinese economy. So it's not just Tesla. Nuevo Leon is like this crazy factory town. And there's many, many Chinese companies coming there, investing. They've started selling into the South American market. They've started selling into Mexico. And many people who have sort of analyzed the situation, including American lawyers, have speculated that there could be ways to legally sell a Mexican assembled Chinese car into the United States with a 0% tariff, assuming you had sufficient North American parts content, which you could do. You just use American, whatever, as long as it's made in Mexico, United States, or Canada, a sufficient quantity, you can qualify for that 0% tariff. So that, I think, is the more pressing issue rather than just sort of the nominal amount of the tariff. If there's something they could do about that sort of loophole, sort of close it, then that would probably be the most consequential thing. But yeah, there has been a lot of talk about how Chinese companies could enter the US market through Mexico.
Grant.
Yeah, I mean, I would just say that closing loopholes in, multilateral free trade agreements isn't something that's easily done. Like, I have a friend that was negotiating TPP before that kind of fell through. I mean, these things take like a long time. It's unlikely you're going to get a surgical change to a specific term concerning one industry. It's like these things move. If you think about a normal, congressional act, this is like that times 10 in terms of the complexity of getting anything changed, is my understanding anyway.
Yeah, I agree. So, obviously, when you have a multilateral treaty like the U.S. Canada Mexico treaty, the new version of NAFTA, it can be a little more challenging to change. So, I could also see a scenario where they raise the nominal tariff rate, but sort of leave that loophole unaddressed. I mean, it's a little bit hypothetical at this point because you haven't actually seen anyone exploit it. But a lot of people have sort of pointed out that it could be actually legal to do that. So I think that's definitely something to watch. But really, the political issue here is that Trump is going to be telling people, hey, um, this electric vehicle policy that Biden has been advocating is going to result in you losing your jobs. You are going to lose your jobs to China because these cheap Chinese cars are going to come in if we're all moving to EVs, and you're going to lose your job. GM, Ford, they're going to go bankrupt. And honestly, I don't think Trump is 100% wrong on that. If Chinese automakers were allowed unfettered access to the US markets to export without any prohibitive tariffs, they probably would really harm the American automakers. You've seen Ford say that they need to have a small EV platform to compete with the Chinese. So this is definitely on their mind, this threat. And they don't want to be caught flat footed. They've already started exporting to Europe. It's inevitable that they will come to the United States, right? We can't shield ourselves from these products forever. And this election really will be decided by a few swing states: Georgia, Arizona, Nevada, Wisconsin, Michigan, and Pennsylvania. And obviously, Michigan, Wisconsin, Pennsylvania, you've got a lot of states in there that are heavily invested in automotive. So the swing states that will decide this election, automotive is a key issue. And EV is going to be really a focal point of, I think, the appeal to these voters. So Trump's going to say, hey, you're going to lose your job to Chinese companies. Biden is going to hopefully, or I mean, it seems like he's trying to make the case, look, I've got this 100% tariff. That's how I'm shielding you from these Chinese companies. Whether it actually does is a different story, but he needs an argument to fight back with when Trump says that he's killing American companies and sending the jobs to China.
No hands.
I've got a comment and a question, or really two questions. I mean, I agree. I agree with what Omar said, which is great. But I'm not a historian of this industry, but I feel like what we were just talking about with Chinese EVs coming in feels like it's probably close to what happened with Japanese automakers in the 70s and 80s. So would be curious if anyone has a knowledge of how that played out and could speak to what might happen based on that. And then second, I'm guessing based on what Omar's saying that the thinking is that Biden is better for Tesla if he gets reelected, but I actually don't know if there's a consensus. I haven't read up on it.
They're both bad for Tesla in different ways.
Net, who would you want though? I mean, if you had to pick purely based on the impact of Tesla, you had to vote. Who would you vote?
Jimmy
I'm not going to vote for either of them. They both suck, and yet I've lived through both of their presidencies. So, another term of each of them probably won't be the end of the world, but both of them suck in different ways. So I'll be voting for maybe a third party candidate, even though
No.
obviously I live in California. My electoral college vote is going to go to Biden, but at least I'll feel better about myself being able to say, well, I didn't vote for him.
Yeah, no, I hear you. But and I don't want to make it about personal politics either, though. But I mean, you think it's basically a tie between who is better or worse for Tesla?
They both suck, yeah.
Well,
Jimmy the
Biden
other.
is more likely to probably launch an
Wait, what?
investigation Trump is more likely to maybe have some anti-EV legislation or something like that, right? So there's different downsides, different positives to each. Overall, I think it's a wash.
Jimmy.
Okay. So historically speaking, I believe the tariffs of the Japanese auto industry, as well as a few other industries in Japan, were repealed in 1976 or 8, if I'm not mistaken. So I'm sure you remember in the 1960s, the Japanese were building an auto industry. First, it began with motorcycles, and they started to export that to East Asia. So in the Vietnam War, you would see a few of those. And then they went into cars. And the reason why was after World War II, their economy was decimated. So we wanted to help build their economy, which is very important. And we needed them as a bulwark against communism. So we worked with the Democrat Party, not the Democratic Party. In Japan, there's this party called the Democrat Party, which has been in power for a really long time there. And they focused on two types of exports, heavy industry and autos, right? So we repealed the auto tariff in the 70s, as I said, and then we began working with Japanese companies to come to America and sell into the American market in the 1980s. Things started to change as communism ended, so then the calculus became a little bit different. But I'm sure you're aware, in the early 90s, the Japanese economy was roaring, was doing really well. They were investing in the American economy pretty heavily. And of course, the East Asian financial crisis came in the mid-90s. And after that happened, we put a lot of the tariffs back on because they were using their extremely devalued yen currency to essentially subsidize large companies to export to the American market. And with the tariffs, a lot of Japanese companies like Toyota, I'm sure you're aware, have now facilities in Louisiana and other places like that to build their cars in America. So that was kind of what happened there.
Pennington. Pennington.
Yeah, sorry, I'm here. What do you guys think if we could have this conversation 2030 and we look back the last 5.5 years? What do you think would have caused a bigger shift in the labor force, AI or the transition to EVs?
Can I have my hand up?
No. Every 5, Jimmy. Grant and Omar.
I was going to say AI, and it's not close.
Yeah, Omar.
Yeah, AI for sure.
Yeah.
OpenAI is going to have an interesting announcement tomorrow. It sounds like they've trained a new model, and they're going to have essentially a sort of like a new user experience, or you have sort of a personalized voice assistant. So that's going to be at 10 a.m. tomorrow.
Well, that's actually, I do want to focus on it a little bit. Maybe Robert can come up and we can talk about OpenAI, Apple, AI in general. In the meantime, Jimmy?
Yeah, I just posted up a statistic on top of China's most important export partners. And I think AI does have some relevance here. There's an argument by Mr. Mark Anderson, from the VC firm Anderson Horowitz. And he argues that AI actually would make things more expensive. It's called the Jovian paradox. Woo! And basically, the argument follows that as consumer expectations get higher, when software companies use AI to deliver better products, the cost of building those products go up as well, and therefore the prices that they have to sell it at become more expensive. So there are many examples of this, many examples. Cars would be another example. Cars got cheaper to make, but with the need for electronics, they became more expensive over time because the expectations of cars with increasing safety and so forth became higher, right? That's a small example. Now, why this is related to China and its exports is Chinese exports need to become higher value exports, right? They don't have a strong AI industry right now, correct? Because they lack the ability to produce locally made GPUs compared to, let's say, NVIDIA and TSMC produces a lot of those things for them. NVIDIA designs new ones and so forth. There's an ecosystem, ASML and other things like that. So my argument here, if you said 2030, is this. China will see Japan. Its exports will become low-value tech exports. America will become a less important export partner. It will eventually have to devalue its currency in order to be competitive. Its local labor force will become increasingly expensive as the country suffers from inflation. And the thing that allows for America to become really successful in 2030 is AI, being able to deliver those high-value AI products without American companies being sold to the Chinese. So if you contrast that to Germany, have you ever heard of a company called Cuckoo, which is a German robotics company, one of the largest in the world, was acquired by a Chinese company in 2019, if I believe. And that was an example of a company, if it was 2030, would be a high-value AI-enabled robotics company, helping companies use robotics to build cars. And that would, in America, we wouldn't be able to sell that company to the Chinese. So we would keep a strong American economy, with strong American AI-enabled companies, with strong demand for our exports. Thank you.
Thank you. Robert, welcome. How are you?
Doing great. Love your show.
Thank you. Are you outside among the birds?
I'm outside among the birds. I'm looking for the aliens in the sky.
Nice. Did you see
Turn on
this?
voice isolation mode.
I was on the Art Bell radio show once, and they were talking about the contrails and what various people would see in the contrails over their head.
What do you think about this OpenAI announcement tomorrow?
I'm real excited. They have a lot of pieces. Like they have the Whisper API that you can talk to from in a rock concert and still understands what you're saying. They have obviously the best models, that, at least so far, that anybody has shipped that answer your questions. I would assume they've learned something from Grok with a Q, which is they make an AI chip, and everybody who runs, let's say, a Llama model from Meta Corporation, it runs it really fast. So you start thinking, okay, they have to have an answer to that. What are they going to show off on Monday that's going to be very fast, low latency? You're talking to it. It looks like a human, and it's talking back, and you're having a conversation with it all day long. If it gets to that level, that's the everything app that Elon keeps talking about. Because if it gets to that level where you start trusting it to do anything you tell it to, because there's a whole bunch of AI agents that get sprung up when you talk to it, you're going to make it a trusted member of your family. You're going to leave your phone running this thing live at your family parties. And everybody's going to find it very entertaining to talk to it. Because I find it entertaining to talk to ChatGPT already in these situations. So automatic agents, right? Multimodal model where it's using the camera full time instead of forcing you to take a picture of your wife's soup or something like that. It'll just see it all the time, and it can have a conversation with you. That's my expectation. It's probably not going to get quite that good, but someday that's coming. Why not tomorrow?
Yeah, I love talking to LLMs. They're really good for just thinking things through.
Yeah, I have one app. You just view your mind for 10 minutes, and then it writes a whole bunch like a mind map out of your spew, and puts little cards with topics on them that it got out of what you just talked about for 10 minutes. Which means Grok needs to Grok with a K, the AI here on X.com. Has a big challenge now, because if I'm right that the Everything app is coming tomorrow, Elon's been promising an Everything app. Where's X.com's Everything app? So and are they going to wait until Apple announces Apple's Everything app, the new Siri, or Google's coming out with a whole bunch of shit in a few days? So it's a fun time in the AI industry this week.
Interesting. Thank you. Just a quick word of thank you to Miro. Miro, thank you for signing up for Patreon. The link is at the top of your screens if you'd like to support the space. Jimmy.
I also wanted to thank Nero. I just saw that. Thank you, Nero, for supporting us.
Miro. Omar?
Yeah, I could see Apple maybe shipping something like this. I don't necessarily see it as an Everything app. I mean, it's a voice assistant. in a way, I understand what Robert's saying. As this matures, it really could become a universal interface to everything. So imagine if you could just use your phone by, asking this assistant to do everything. Hey, order this from Target. You know, is there any important messages I need to respond to? It could be this sort of universal interface for everything. So there definitely is, I think a potential there. This sort of UI of like a voice agent you can talk to who can help you for things. Some of the stuff they found in the ChatGPT app was related to taking calls, incoming calls, stuff like that. So I'm not really sure what that is. Maybe it can make phone calls for you or something like that. But yeah, it sounds. We've also seen that there's some new model code names, GPT-4L, discovered in the ChatGPT for Android app, GPT-4L Auto. So these new versions of the model, we also saw that on their website. It used to say GPT-4 was our most advanced model. It now says an advanced model. So we're getting, probably new models and a new sort of user interface tomorrow. Um, they said, hey, it's not a search engine, it's not GPT-5. They don't want people to be disappointed when it's not those things. But yeah, it sounds like kind of what Karpathy was working on. If you remember when Karpathy was at AI, his bio said working on a kind of Jarvis. And if Jarvis was the thing that Iron Man talks to, right? So that I think is probably kind of what they're releasing, this voice agent experience where it's more like kind of your personal assistant that you can talk to. And I could see Apple introducing something similar in the form of a new Siri at their developer conference next month.
Robert?
This will take a lot of oxygen away from such a new Siri, because we're all going to be addicted to it in the next few weeks, is my prediction.
Well, the rumor is that Apple is actually closing in on a deal with OpenAI, which would be pretty shocking, for Apple to be using an essentially Microsoft affiliated LLM in the iPhone. So I'm not sure what the terms of the deal would be, if that would involve like on-device inference or what, but it could really add some meat to the new iOS's AI capabilities if they have a deal with OpenAI for GPT-4 or GPT-5 or whatever.
Do they give them access to the sensors in the Vision Pro? Because if you're wearing a Vision Pro, the new Siri knows where you're looking, what you're touching, what you're holding, what you're gesturing toward, what you're walking toward, what you're walking away from, what's walking toward you, what's walking away from you. It can then you can talk to an AI about all that stuff, right? If you're holding a Coke can, hey, can you get me 10 more of these on Amazon? That's where I start
Thank you, Robert.
thinking of that, Omar. You're gonna be doing everything on it. Yeah.
Mira?
I just want to say, yeah, I joined up. I enjoy listening to your show every day, and it's the first time I've ever done anything on Patreon, and I look forward to listening every day.
Thank you very much. I appreciate it. Jimmy, can you be as nice as Mira? Silence. I'll take this as a yes. All right. Robert, what do you make of what Omar said, which is it is shocking for Apple to use a Microsoft affiliated firm in its iPhones, like, because I guess they couldn't develop it on their own, huh?
You forget Microsoft saved Apple Computer by investing a lot of money when Steve Jobs came back. So it's not the last time.
Many years ago, when they were going bankrupt, many decades ago. Obviously, Apple has been much stronger in recent decades.
It was a long time ago, I agree, but it has happened. So, weird shit happens when, competitive strategies have changed, right? OpenAI didn't exist a few years ago, so now everybody has to change their strategies because they all probably fucked up and missed it.
Yoda.
You guys, I just joined. What have you guys been talking about?
Nobody tell you that what we're talking about. Let them guess. Jimmy.
Thank you very much. I would like to say a few points about this. The Microsoft-Apple partnership is really historical if you think about it. You have two extremely large companies willing to partner together for the sake of humanity and the greater good. I think that's a good thing. I mean, in other countries, it doesn't happen. They're usually at each other's throats. And I also want to make another point. This is so unique to America and the American experience. You know, we are trying to build AI products in this country. We take it for granted. But I would ask any of the people in this speaker panel to go to the foreign language spaces. You know, they speak Arabic to each other. They're in Egypt, speak Hindi to each other in India. And there they speak with admiration about America's AI innovation because they can use it. Unlike the Chinese products, they can actually open up ChatGPT, Claude, and other things, and they can use it. And their countries can't come close to the level of innovation that companies like Tesla can offer. And so this is an important step for humanity. I know we talk a lot about, you know, competition, who's going to win, but this is a win for America. This is a win for humanity, and something that we have a very strong moat that we built around ourselves. It's going to be very hard for other countries to approach the level of success of, for example, OpenAI. And if Apple want to work with OpenAI and Microsoft to improve and innovate, well, you know what? That's only a win for America. I'm not too worried about the situation with Chinese EVs. At the end of the day, it will become a commodity. Tesla is a technology company. And what irks me is that we talk a lot about cars, not enough about data and innovation in the AI space. And that is something that no country currently comes close to America right now. Thank you.
Very good. Yoda.
Yes.
How are you?
Doing well. Happy Mother's Day for all the mothers out there.
Happy Mother's Day for all the mothers out there, especially Machine's mom. What do you think about 0.99% financing deal that Tesla is now offering through the end of May?
I think, yeah, I think earlier on in this space, the tone was quite pessimistic. I actually think that there's maybe some positivity in the take rate of FSD that essentially allows Tesla to lose a little bit of margin via the rates, but make it up on the FSD side. If you look at just the lease rate, for example, originally going from I think 329 to 299. That $30 is 30% on $99 FSD.
Omar, what do you think of that?
Yeah, it makes sense to me.
Yoda, do you think 0.99% will allow Tesla to work through the excess inventory of Model Ys at March 31?
Yeah, absolutely. You know, that Q1 production inventory needs to be you know, finished as soon as possible. So yeah, I think that's part of the reason too. Yeah, I think having been upgraded now to 12.3.6, the only thing it's really changed the way I think about how fast this thing is progressing coming from 11. So I'm quite bullish actually coming out of this weekend.
And you still believe there will be autonomous robotaxis on August 8th? Service will start without drivers and human drivers in the driver's seat on August 8th. Is that the bet you're making still?
I don't ever go back on my bets.
Omar?
Yeah, so I did a little bit of testing of FSD this weekend, and I noticed that about 75% of the drives I asked it to do were completed without any intervention at all. So you can literally see in the video I posted, I had to go make some flower shop deliveries for Mother's Day. So I went and I went from the flower shop parking lot. I turned it on. It exited the parking lot itself. It did the 6 deliveries, then went back to the flower shop. So 5 out of 7 drives, completely zero intervention from start to finish. Then the other drives, still zero safety critical interventions. One was to pull over. For some reason, it wasn't pulling over because it didn't see the shoulder as a valid place to pull over. It kind of had some lines through it. So I had to pull over manually at the end of the drive, but it did the whole drive without any intervention. And then the second one was it got to the end of a dead end street and it had to turn around, and it couldn't turn around completely, but it didn't try and charge into the car, requiring me to take over. It just stopped. And then I had to reverse and go forward. And they're supposedly adding reverse in the next software release. So if you can eliminate the safety critical interventions, then you can get the service to a place where a remote operator could have actually solved these things. A remote operator could have helped it figure out where to pull over or to reverse and get out of, a tight street if necessary. Not that I'm saying they'd want to do that, but others like Cruise have done things like that. So if you can really, really just make it so there's no safety critical interventions, then you're actually able to launch a level 4 service that's driverless, at least in some limited area, and have it work for, demonstration purposes. So I think it's really significant. Not just because I'm seeing 75% of drives that were zero intervention, but because on 11, it was something like 5 to 10% of my drives. Often the drives did have zero disengagements, but there would always be some accelerator push or some speed change up or down, at least at some point during the drive. And with 12, actually, most of the drives are now zero intervention. So 12.4 is supposed to come out this week. Hopefully, we see some continued progress there. If they can get to 80%, 90% of drives that are zero intervention, 99%, that's kind of what we want to see as they continue to release new versions.
Yeah, agreed. I could describe a little bit of what I saw coming from 11 to 12.3.6. Essentially, it was not super comfortable with version 11. It could functionally do most of maybe what 12 could do, but I think as the driver, you're a little bit on the edge. It's like driving with a new driver, teenager driver who just got their license. Um, you're watching out and you're not relaxed. The moment I updated to 12.3.6, it is now a comfortable ride. The car is confident. Now, specifically, what pushes over the edge is when you're sitting back, you start to realize that it's not just driving between the paths anymore, but where needed, it's taking the human line. I think in racing they call it the racer's line, where it goes over certain lines, etc. And it's doing that intuitively. In fact, I think one of the issues with us is that we look at the screen too much. If you actually focus on what's outside in the windshield, it's incredible how human-like those paths are. The acceleration, the stopping, those things are now comfortable. There was one case where it was around an intersection, kind of a shopping district, and all of a sudden, it stopped, and I thought, okay, what's going on? Maybe there's a glitch. And as it turns out, across the intersection, there were pedestrians ready to cross that I had not seen. And so there are things like that where you are seeing the green shoots of it outperforming the human driver. So I would say, uh, notwithstanding the first meters, and we're talking about the first like 5 to 10 meters where you're pulling out of the driveways, notwithstanding the final 10 meters where you want to go in back to your driveway. Everything else is essentially human-like. It passed this weekend, my dad's test, and it passed a wife test. And those are, cases where they did not feel very comfortable with 11, now that they feel comfortable.
Okay, I want to pin Gavin Baker's post at the top of our screens. Actually, never mind. This is from April 8th, when Elon responded to Gavin and said, "We've made some upgrades to Dojo." When Gavin says, "Finally, I think we will see Dojo enter the ring as a legitimate competitor for some workloads later this year." And Elon said, "We made some upgrades," and Gavin responded, "Awesome, look forward to learning more when it launches. Also interesting to think about the FSD data sets in the context of increasing multimodal LLMs." Robert.
As Tesla Yoda was speaking, I was cheering the whole time. I just drove, or my car drove from Los Gatos to Santa Cruz today. Man, it was like being in a race car. I've been in race cars with like Brett Bodine, who's a NASCAR legend. He was driving me around Sonoma Raceway in a NASCAR pace car. Okay, it's not quite that good, but it's getting there. It's smooth. It's confident. You're driving right next to the wall at a high rate of speed on a turn. My mom wrecked a car on this road. My brother wrecked a car on this road. It's not the easiest road to drive for human beings. 17 between Los Gatos and Santa Cruz, but it's really starting to amaze me. Every single drive. And then it tries to put you into the curb. At the end of the drive going into Santa Cruz, I was in an intersection and it was just creeping slow toward a curb. Like I let it go as far as I could let it go, and then I had to step on the brake and take over because I didn't want to have my rims wrecked. It's not quite there.
Yeah.
But people like all of us can see the light at the end of the tunnel finally.
Yoda, okay, go ahead, Yoda.
Go ahead. You had a question?
No, you had the comments. Go ahead. I don't want to interrupt you.
Yeah, I was just gonna say one of the little features that made a huge difference was, I forget the name exactly, but the idea of the variable speed. So when I turn that on, you don't really need to adjust up or down with the scroll wheel anymore, because just as human drivers, there are times where you're in a particular zone where you want to drive a bit slower, or there's an area where you want to drive a little bit faster than the speed limit. All those things are actually quite intuitive when you turn on that feature.
Yoda, how do you see the path to autonomous robotaxis shaping up, according to you, by August 8th? What would you have to see in the coming weeks and months to kind of say, okay, we're on the path to my prediction?
Well, when the same car that I have now in my driveway is sitting there with FSD 12, the only thing I'm thinking about is that this is a SIN that's sitting there doing nothing 90% of the time. The key to unlocking its potential is really for Tesla to come out with some sort of an application. Now, I don't know what, but that allows this thing to be used a little bit more. Maybe not by me, but by others who needs a ride. And so I think the ride hailing app will be it's actually a required invention that will unlock the potential of idle cars with intelligence. That's how my view has changed. The car was a nice EV. It was good with some nice ADAS before. Now I've got an intelligent asset sitting in my driveway that it's a sin that it's not being used. It is the way I'm thinking now. Now, specifically, I think for heading into 8.8, I think we tend to think in ors, whereas in business and in the real world, things happen in ands. And so I think, as I mentioned before, on 8.8, there will be a purpose-built vehicle that will be unveiled and demonstrated in a restricted area. Now, to Omar's comment earlier, maybe there's some sort of remote driver, maybe there's some voice mechanism for that last meter communications, whatever it is, but it will not have a human in the driver's seat. If it did, it would be the lamest product ever. It would be like if a mega tech company came up with a better pencil or some, I don't know, something like that. So the Robotaxi will happen concurrently as there are a large, existing fleet of model, Y, 3, S, and X on a road, whereby at this, not at that precise moment, they're still driven by humans with supervision. Now, as Tesla's technology evolves in the months, those drivers are no longer needing to be supervising their own cars, and that's the moment where they'll add those cars into the network. I don't know why that cannot happen concurrently at the same time.
Isn't Elon going to take one of these things to work without a steering wheel and have a video camera crew shooting him on a Los Angeles freeway without a steering wheel? It's to the place where I'm trusting it to drive me to Santa Cruz. And he has built how many newer than I have? Right? He's working on
17's pretty crazy. You got to be careful there.
You got to be careful, but it's good. And if you give me some newer builds like Elon has in his car, right? Because he has newer builds than even you, Omar, right? And you get newer builds than I do. He has builds that are pretty freaking advanced compared to what's in our cars. So I think if I was Elon, I'd take a little risk and say I'm going to film on the freeway with this thing. No steering wheel. No human being. Maybe you put your finger on the screen and drive it in a sketchy place.
Yeah, I think in the short run for the existing fleet, whether there is a wheel or there isn't a wheel is less important. I think what we want to focus on is the path from supervised to unsupervised. I actually think depending on the Model Y, the updated Model Y timing, it could be that the Model Y may not need to have a steering wheel if it's a year and a half, 2 years out. But again, that I'm not going to bank on that or bet on that. Whether it has these features or not, like hardware features or not, is less important. The key is whether the technology can be unsupervised, and then we can delete the steering wheel, at the appropriate time. No hands mode, guys. No hands mode.
Tesla Yoda, I have a question. So you think that they will be able to unveil FSD unsupervised on 8.8?
That's correct.
Okay, that's quite an aggressive timeline. What makes you think that they can get there?
What makes me think is that the unsupervised has a caveat of a certain area. So it doesn't mean unsupervised deployed to all the fleet of the existing Ys and 3s and S and Xs. It's just for the robotaxis in a specific regions. It can operate unsupervised. And then the current fleet that will catch up as the technology further improves.
I mean, obviously, this is a vehicle unveil. So we're talking about the unbox process. We're talking about a dedicated robotaxi vehicle. There would be no way for them to know with certainty that by August 8th, the model is somehow going to be, ready to launch a robotaxi service. It definitely wouldn't be that specific, August 8th, right? So that's not what this is. I think obviously it's going to take time to really, grind on this software. So I think really between looking at Waymo's publicly filed statistics, between 20,000 to 80,000 miles per intervention, you can start to sort of launch these services. And I think they're not necessarily years and years away from that, but they're obviously under 1,000 right now, like a few hundred. So there's quite a ways to go, and they're improving quickly. It'll be interesting to see what 12.4 and 12.5 can do. But this is really a vehicle unveil and not them launching a robo-taxi service. I think we should kind of keep realistic expectations. Although a lot of progress has been made, it is a very, very high bar what we're talking about here, a generalized robo-taxi service around the world. And it's not going to happen all at once. It's going to be really pushing for years and years to change the entire model of how consumers, use transportation. So I think that is going to be probably something that does not happen within 3 months. But at the same time, I do think that people are still underestimating how good the product is getting and how useful it might be. I know we had some discussion about some data that suggested the take rate could be as low as 2% in terms of free trial conversions. Sawyer and I also ran a poll on X, and granted, of course, there's going to be huge sample bias given our followers are the diehard followers of Tesla, right? But Sawyer, I think, got about 44% or something, and my followers were about, 66%. And this is thousands of people obviously responding to these polls. So I'd bet the answer is probably somewhere in between 2% and 66%, maybe, 5 to 10%, hopefully at least. I think if they can get it as high as 20%, then they essentially double the user base. So we'll see what it actually ends up being if they have any disclosure on FSD users. But I believe, not necessarily from any data, but this is my belief that as the nag is removed and you have summon and banish, this really becomes something that's just kind of irresistible to subscribe to. And even though it's expensive, people want to buy it just because it's just so cool. And you can't go back to your car not having it. So again, I don't have any data to support this. As a matter of fact, all the data we have seems to kind of point in the opposite direction. But obviously, I really like FSD, and I think it's not going to necessarily be an instant thing. But as it penetrates the market, I think the users who use it are going to fall in love with it. And the really important metric, I think, is not necessarily free trial conversions at a given date, but actually how many people subscribe and what the retention is over, say, a 3-month or a 12-month period. We need to not only get them to sign up, we need to get them to re-subscribe every month, through the auto pay, obviously.
My wife's experience shows that Omar is right, that you need a little bit more time with FSD to go from somebody who didn't like cruise control at all. And I always bought the best Toyota advanced cruise control in our cars. She never used it. She never liked FSD in my Model 3. She if I asked her to drive, she'd never turn it on. And now she's using it, but it took her about 2 months to get to the space where she has a new Model Y and got to the place where she trusted enough to use it in the town. In the first month, she used it on the freeway. Second month, she's using it in the town and telling her friends about how cool it is. So wait for the data. The data will start getting better over time because it's improving to the place where it's convincing very resistant consumers. Francine's listening. She knows what I'm talking about. My wife doesn't try things first. I do. And if she puts them on, then you know the world is about to change.
Yeah, I think in the car shopping process, people pay a lot of money for, uh, for accessories, for packages, and there's an opportunity for Tesla to incorporate FSD, whether it's through the free trial, through this the selling process in the showrooms, to get people to really understand what it offers. I remember a couple of cars ago, I think I had a Lexus or something like that, where I paid 10 grand for some sport package with a lower front grille, and it was completely useless. And whereas this is, functional, so this could have impact on the safety of your family. And so, yeah, I hope Tesla does a better job. Something I think, if we see that FSD pricing gets reduced, Omar, this could be a sign of obviously the take rate not being where Tesla wants it to be. So if we see 99 going down to 69 or something like that, $50, that's going to be a telltale sign. Now, hopefully, before they do that, they kind of maybe have a two-tier whereby maybe it's 69 for up to 10, up to 1,000 miles for the month. If you drive over that, then you go back to 99 or some sort of a tiered scheme there.
Yeah, I don't see them necessarily cutting it again. I mean, they may if they want more users, but I think you definitely probably see a higher uptick at a lower price. That's just basic supply and demand. But there's other options I think they could try. Something like a 9.99 day pass, I think, would be great for people who don't necessarily want to use it every day. And then once they start, if you make it a lower commitment purchase, maybe then they start to like it, they subscribe monthly. Because I think it is just very new for people and people kind of need to dip their toes in. Another thing you could do is make it free for 10 miles a day. And you know, that would probably eliminate a lot of subscription revenue actually from people who didn't use it that much, but it would also get a lot of people to try it and maybe eventually subscribe. So there's a lot of things they can do to drive adoption. The most important thing they can do is just make it amazing. And yeah, there's a lot of different things they can do to play with pricing.
Yeah, and I think if the household has two drivers, only one of the driver needs to see the value. So if it's a husband and wife, or if there's a teenager in the household, whereby the parent sees value in safety, it sort of takes just one of the drivers in the household, because currently FSD doesn't follow the account owner.
Hey, can I speak? I was hoping to take this to a higher level. Like I think this all gets taken up. Like FSD is going to get solved. So I'm thinking more like why did the Chinese let it happen? Why are they taking on FSD? Why are they letting it be in China? Do you guys have any ideas?
Yes, it will make their economy more productive, and there will be fewer tragedies in their populace.
All right, can I take it to the next level? You guys
Yeah.
ready for this one? So the Chinese know that just selling a cheap EV into the United States is a commodity. Like that's not where it has to be. Like they have to have autonomy to the car or it's worthless. And they can't bring Chinese technology and Chinese cameras to a Trump administration. It's never going to happen. So they have to have some neutral FSD, which is what Tesla is, right? So they have to, if they ever want to sell a Chinese EV in the United States that's autonomous, they have to have FSD. And then it makes no sense to have FSD in the United States vehicles and not in the ones they sell in China or the ones they sell in Spain. So I think FSD, like Max, is going to become the neutral standard. Like they're not going to have different versions of it in their Seagull and in their other cars. They're just going to have FSD and everybody else will just jump on board.
You know, how this might work in some places is how I think it's going to work in Phoenix, because we have Waymo in Phoenix, and Waymo is certainly full service, you know, full FSD. It's not Tesla's, but it is. And many people use Waymo when going from place to place. And that's how they get used to trusting something like FSD. So I actually liked Waymo. I try everything because I'm an early adopter, but I took my daughter and my grandson in a Waymo when they visited me in Phoenix, and they were like turned on from minute one as soon as they experienced it. You have to get the guts to experience it, or the curiosity, or the trust, whatever you want to call it. And once you do that, you really understand that it works unbelievably well. And from then on, you trust it.
Francine?
So, yeah.
I know it's rude to ask a woman's age, but
Oh, I'm going to be
is there any
83.
possibility you can share how old you are?
I'm
Yeah,
going to be
that's why I asked.
83 on Tuesday. So
You
I was
fucking
going to
rock.
mention
You're
that.
an inspiration to many people, Francine, because you're kicking ass all the way as far as you can go.
Thank you. Well, I
Yeah.
just want, that's because of you, Robert. You taught me a whole lot of stuff early on, and I've just stuck with it. I've learned how to really trust all kinds of technologies, and I've learned so much. But that's not the point. The point is that Waymo it's not about me. It might not even be about Tesla. It's about the cities where they now have self-driving cars, and ordinary citizens are, allowed and encouraged to try them and to have the experience. And once you have the experience, it's sort of like you can't unsee it.
Just based on what Franklin said, I think a lot of people don't realize in the US, the reason we don't have any Chinese cars here is there's a 27.5% import duty on Chinese cars.
Yeah, and it was actually 2%, I think, before the Trump administration.
Correct. 2.5 before Trump, he added 25%.
But yeah, that's pretty cool that you're so forward on technology, Francine. It definitely is an incredible experience when you sit in a driverless car for the first time and you realize that this is probably what the future is going to look like.
Oh yeah, and that's what my daughter said when I took her. She's Gen X, and I took her. She lives in London, and she had never had any experience or really given it any thought. And as soon as we took one ride, and she said to me, "This is going to take over the world, Mom. I just know it is." And I'm like, "Yeah, it will. It's just taking longer than people expected because there's so many issues, that I can see. For instance, Phoenix is easy because its streets are a grid and it's easy to train the vehicles. And the weather is good all the time. But it's going to be a little bit slower coming to places with extreme weather patterns and non-grid streets, so it's harder to map the streets. But it'll happen. It'll just happen in order of how easy it is to happen. This is now happening in LA and in Austin.
August 8th is going to bring a complete upheaval of the transportation system.
Helen, regarding August 8th, does anybody think that Elon's going to come up with a model? I don't mean a car model. I mean a model where you pay $99 a month if you want to use it privately, but if you want to actually put your car on the app so that people can see it, well, then that's $5.99 a month.
Yeah. Before we go to that, Franklin, first of all, your sound quality is really poor. Maybe microphone change, whether you're using AirPods or something needs to be done. And I asked Jeremy to come up because Jeremy just got FSD for the first time. Jeremy, would you like to tell us about your experience trying FSD for the first time?
Yeah, sure. Hello, everyone. I love all you guys. So I was previously on the 8.9, and I just got the update on Friday night. And I was super excited to get up Saturday morning and try my first FSD ride that everyone has been showing off for years. And I was pretty impressed. However, I left my house. It worked great. Got onto the highway, and I missed the first exit. So I disengaged, looped back around, and then I was on my way to Target, and it made its way to the Target area, and then it turned left into a no left turn road. I mean, I let it do it, but it got me there. Aside from those two things, it was perfect. I was pretty impressed.
That's great, Jeremy. So you, this is your free trial, and are you subscribing to it afterwards?
I don't know. I drove maybe 24 more trips over the weekend, and it was a lot of fun just letting it drive me around. It had a lot of problems. The one problem I had is when I got off on the highway, like I'm going 55, 60 miles an hour, and then it gets to the ramp and it wouldn't slow down. It would take the ramp at like 50 miles an hour. Maybe I'm doing that wrong. I'm not sure. So I had to disengage on most ramps.
Gotcha. So you haven't decided just yet whether you're going to subscribe or not.
Most likely I will not be subscribing.
Mm-hmm. Yeah. What would it take for you to subscribe?
Well, the use case mainly, I did my route to work and it has bad map data, so I wouldn't be able to drive it to work. I would take the highway to the exit to go to my job, and it would want to go north instead of south. So I would have to disengage again and go to my office.
Mm-hmm. Or do you
Won't it
think
learn from you? Robert, you must know the answer to this. Won't the car learn from Jeremy
Over
after he
time, it
drives?
does, but not immediately, right? My car, when I bought it, couldn't change the. It still makes mistakes. If you talk to the car, it asks you to talk to the car and tell it why you were terrified, why you took over.
I did hit the button and did the voice memo.
Yeah.
But we now have.
I'm always talking to my Tesla. Hey, Tesla, you really messed that turn up. Stuff like that.
We now have 5 Teslas at our office, and our office is maybe 25 people, 26 people. And one person has the FSD and they never use it. And the other four, I'm one of them. Two of them had the trial, and none of them, they had it last month. So their month trial is over and they didn't subscribe either.
Because it makes too many mistakes, or because they just don't like the concept
Well,
of it?
I think it's because it's almost, they describe it as pointless, right? I mean, they're just
Because
going
they
back
have
and
to
forth to
they
work.
have to actually keep driving, even though they don't want to really keep driving, because that's why they bought FSD.
Right. So they're driving like 10, 12 minutes.
Right
to
now,
work.
we're being nagged every few seconds to touch the wheel, stuff like that. Right. Put some torque on the wheel.
Thank you, Jeremy.
Soon those nags will go away.
Jeremy,
All right.
why don't Jeremy try to when you kind of continue to experience it every now and then, and maybe you said at the office there's about 5-6 Teslas, and I think you said one person has it, and that person I guess purchased it before, right, Jeremy? That he wasn't subscribing to it.
Yeah, he's the owner of the
Yeah.
company. So he had the Model S, I don't know, 2014, 2015 with it. And then he just bought a new Model S and he bought it again just to have it.
Okay.
But he doesn't use
So
it.
if you could please every now and then come up to speaker board and share with us any perception change around FSD, whether yours or your colleagues, if one of the Teslas subscribe to it, like any sort of those updates, I would really appreciate that.
Will do.
Yeah, because it seems from the data that we got from YIPIT data a couple days ago, it seems that your experience is representative of the more the kind of average consumer, and we do need that perspective in the space. I appreciate everything that we're seeing from our YouTube creators and X creators about the videos they share. I think that's representative of what the mass market will see in the future, but we also need to see where the mass market stands today as well.
And it's a rough market here. I mean, there's a lot of Teslas on the road in some of the wealthier neighborhoods here, but a lot of people here are still naysayers on the electric. Like even my family, they all think I'm nuts, right? But most of the other coworkers, besides us five that already have the Teslas, they want nothing to do with the electric car. Everyone in my town, I'm the only one with a Tesla. I don't know, and people haven't grasped the idea yet.
Yeah, thanks, Jeremy. I think right now everyone's experience may not be all for FSD. Definitely, I've experienced some of those poor experiences on version 11 as well. I think this actually maybe makes me think about whether Tesla should track who has never tried FSD, who has tried a free trial but not in a while and did not subscribe, and who has maybe subscribed but let's say did not renew after a while. And periodically, as they improve FSD, where there's like a bit of a step change, maybe it's between say version 11 and 12, version 12 and 12.5, etc., to then provide free trials again to the drivers, to the owners. That might just allow folks like Jeremy, who let's say did not subscribe, to then have another chance with a more improved version.
So you're in the suburbs of Chicago?
Yes.
Okay, yeah, that's interesting. I mean, I can definitely see that people might have vastly different experiences depending on where they are. Because here, most of the drives are now, completely perfect. So, I mean, Chicago has always been kind of a problem spot. People have been complaining about, Chicago since the beginning. There's a lot of challenges, even in, some of the suburban areas. But I think that's definitely probably a pretty typical experience, depending on where you live. If it doesn't work well in your area, well, you're probably not going to subscribe.
So I think it really worked well when the streets were formed perfectly, like nice, clean 90-degree intersections. But I did a run to Costco this morning, and like the Costco entrance and exits, they're pretty congested and the lane lines aren't that clear. And I had to take over in those messy spots. When you have these newer subdivisions and newer areas that are built up with roadmaps done right, I think it probably works better.
Can you guys hear me better now?
Much better.
All right, so I wanted to make a real quick point. Like, just listening to you guys, you almost sound like you're trying to convince each other by uptake or how people did get into Costco that FSD is going to work, right? I think you guys need to like go further, trust that it's going to work. We know it's going to work because Elon said it's going to work, and Elon doesn't do things that don't eventually work. And the fact that the Chinese saw something that made them accept FSD, like this is a foregone conclusion. We don't care about uptake rates. We don't care about the $99 a month. You're talking pennies. When it becomes the standard worldwide, it doesn't matter if they drive it in Phoenix or anywhere. It's going to be in every country.
So I want to
Very
make a
good.
comment.
Yeah.
Jan, I just completed the 30-day free trial, and in my opinion, 30 days is not enough to get used to the system. When I first started driving it, I was freaking out like crazy, but I let it go as far as I felt comfortable. And I think that's the whole key here is I know I was disengaging when I shouldn't have, and it wasn't safety critical. I think we need more than 30 days for us all to get used to it. I probably would subscribe to it if I had more time with it, but I didn't because I was freaking out because the car was driving itself, and I had never experienced that before.
And Stefan, what version were you on?
Think I stopped right before 5.
Sorry, version 12 something?
12.3.5,
Okay.
right? 12.3.5 was the last.
And what area were you in, Steven?
I'm in Dallas area, suburbs.
And
Okay,
that's a
cool.
fairly well done street. Everything's painted really well and stuff like that.
Yeah, it is really well, but you're still freaking out the whole time you're experiencing it. You never had a car drive itself before.
It takes a while, doesn't it?
Yeah.
I think we need to
Omar,
give people 3 months.
I mean, it sounds like it's probably going to be overwhelmingly people in California subscribing because they're probably the most tech forward and also they have the software working the best. So I would probably expect to see sort of that balance in the data.
yeah, on that point, question for Omar. Is the density of the number of Teslas around you, around your neighborhood, around your city, potentially a proxy for how well FSD 12 might work, just because of the data of the type of streets around you?
I mean, theoretically, once it's seen enough different types of streets, it should be able to generalize very well, even to situations it's never seen before. So we just need more time for the model to train. We need more Teslas in those places to validate it, right? You can't solve for a disengagement you don't know about because there's no Teslas there. So it'll take some time for it to improve in some of these other areas, but it will. They'll oversample examples from these areas where they come, and they'll make sure that the model can work just as well in those areas as the most densely Tesla populated area there is.
In theory, more density of vehicles does lead to a better service because in San Francisco, an average street now sometimes sees a new Tesla every few seconds going down it. And that grouping of Teslas going over, say, a pothole can track the pothole better than in rural America, where there's probably a one Tesla every few days visiting a street, maybe not even that often, right?
Franklin, you spoke about China a couple times. Why do you think China wants to let Tesla in, specifically FSD?
Oh yeah, maybe you guys didn't hear me because I was using different headphones. No, I think that there's no way that the Trump administration lets any software written by the Chinese running on a BYD or a Neo vehicle drive around the United States and send data back to China to be analyzed for an FSD program. So the only way they're ever selling an EV in the United States that has any chance of being autonomous is to go with a neutral third party, which is what Tesla is. I mean, Elon's not a sellout. He's for free speech. He's not gonna do anything with the data. He's trusted. He's proven himself. So that's why they're going with him. And they know if they have to put FSD in their cars in the US, same thing's going to happen in every other country. They're not going to want the Chinese technology snooping around in their country. They're going to say, all right, let's go with a neutral third party, which is FSD. I think whether it gets taken up in Dallas or Chicago is a pointless discussion. Like, it's going to become the standard, period.
Thank you, Franklin. Just a quick reminder to everyone in the audience, if you are enjoying this space, please remember that this space is only possible because of my patrons. If you'd like to become a patron, the link is at the top of your screens. This space has been going on for about 3 hours on a Sunday night, and I'm really grateful that everybody's here contributing to the discussion. I think it's been a very fruitful discussion. We have a bunch of new speakers. That's always good. Chill mode, and there's some discussions going on YouTube Live too, so I love that. But it is getting close to my bedtime. Any other questions, comments, any final comments? And we'll be back again at 2 p.m. Central tomorrow in really about 14, 16 hours. So don't miss each other too much, Mario.
I missed you yesterday, Yaman.
Yeah.
Not really.
I do actually get comments. They're like, I don't know what to do with my time. I'm like so used to having this on.
So we're all kind of obsessed with FSD as far as the financials, right? $99 a month, right? They reduced the revenue immediately for existing subscribers, for example. But I think the biggest factor of the free month was the increase in data suddenly, right? So, and maybe Omar, you have some idea of, I would imagine that less than 10%, single digit percentage of Tesla cars were using FSD. And so the data must have gone up by 5x immediately. What's your take on it, Omar, for that month?
Yeah, I'm sure they got a lot more intervention data, given that a lot more people had FSD installed. They probably found a lot of interventions they had never seen before.
And they might even be still working through that data. And maybe they'll do another free month in 2 months or 3 months.
Awesome. Brandon?
I just wanted to say that everyone should be a Patreon because if you're working and you're doing this, maybe you're more productive. I've been doing Uber the entire time, driving people around while listening to this space, and I keep my sanity by doing that. So it's definitely worth becoming a Patreon member to Yaman, especially if you're in here like every single day for hours. Where else can you get that kind of value?
Thank you, Brandon. I appreciate that.
So are you giving them rides on FSD?
No, my 2015 Subaru Forester doesn't have FSD, unfortunately, but that'd be cool. Maybe one day. I don't think I can upgrade it though.
Can we sell you a Tesla, Brandon? Do you have any questions?
I know all there is pretty much. I just am broke at the moment. Broke 23-year-old.
How much are you paying for your car right now, or do you already own it?
It is owned. Nothing. I pay nothing.
Just the gas money. Yeah, I mean that's
Just
hard
the
to sell,
gas money.
right? This is an old car. Depreciation on it is at this point very low per mile. If the car is cranking, then I guess it's fine. And your gas savings. How many miles do you drive a day, Brandon?
It depends. Right now, I just quit my job and I'm starting a new one in like a week, so I'm just kind of doing more Uber right now. But I mean, on my Toyota Corolla, I put on 25,000 miles in a year, maybe a little more.
Yeah, yeah. We have two Uber drivers now on the stage. TSLA also does Uber rides as well. Brandon, I didn't realize you were only 23. I mean, you sound wiser than 23.
I mean, my fiance is about 5 years older than me, so maybe I'm
Oh, there
like
you go. Yeah,
batting above my age here.
yeah. That's great. Congratulations. When's the wedding?
Whenever the U.S. government decides they want to approve I think it's called the 120 or I-129F visa for her, because she
Uh
doesn't
huh.
live here actually.
Where's
So
she at?
El Salvador.
Okay. How'd you guys meet?
We were both. She was in the U.S. on a work visa, and I met
Hmm.
her at some job at like a hotel like a couple years ago.
Oh, nice, nice. Well,
Yep.
good luck to you guys. That's a tough process, but in the end, it'll be worth it.
Oh yeah, for sure. Thank you. Appreciate it. I'm gonna go pick up Zuko now.
All right. Bull 2035.
Yeah, I just wanted to point out on China. So, as I think most of us know, in China, technology is a really big deal. And in March, the Chinese Communist Party had their annual meeting, and they made technology the focus. That's their drive right now. So, it makes the folks happy over there. So that may also be why they're trying to, if they do partner with Tesla, why? Because it's very popular and it's what their focus is right now. And you can find more. Bloomberg had articles on this. There are other resources out there.
Thank you. Any other questions, comments, any final words? If somebody wants to sing lullaby to me, I would appreciate it.
On August 8th, Elon Musk will introduce an experience, not just a single vehicle. All of the Tesla vehicles have the experience of, for instance, vent hopping. If you get in a new car, are your vents set the way you left them in the last car? Is your audio system set the way it was set in the last car? Is your seat set the way it was set in the last car? That's an experience that only Tesla can have because Elon's been planning ahead.
Thank you. All right. On that note, let's end it. Thank you very much, everybody. Talk to you in a few hours. Take care. Good night.